think because today was a holiday Monday, most people forgot today is Wednesday.
Yeah, could be for sure. All right. All righty, perfect. So we got this going, and right, well, welcome. This is again, I am recording this, William, so I will start off with my introduction. I'm an investor and a real estate broker, and I've been in business for 24 years. My goal really is to share with everyone each week, the details and the 8 steps that I took in purchasing my multifamily deal, in hopes that you'll do the same. I am not selling anything or offering anything, and I am not a financial advisor. I'm just sharing my story with you and hope that we can use this platform to share information with each other and learn from each other. Now, I started in the mortgage industry back in the mid-90s. I also purchased over 100 properties throughout my career. I flipped, sold, leased, kept properties there. And in 2001, we built 150 capacity restaurant from ground up. Had a staff of about 15 people, including managers, chefs, and servers. And in the last 10 years, I have focused my business in representing clients in residential and commercial real estate. I purchased my first multifamily property, which was 34 units in Texas, back in 2015. That's a typo there. We were looking for a way to create cash flow and generational wealth. And we asked ourselves, how can we make our money work for us? And here are the reasons why I invested in multifamily property, and I hope that it inspires you guys to also do the same. Number one, I was looking for cash flow, right? What can I purchase? Where can I put my money and get a decent cash flow? And multifamily was one of them. And just in a very just superficial way, cash flow really is your rental income minus all of your expenses equals your cash flow. Okay. Number two, it was the availability to have my loan paid down by my tenants. That to me was just like prime, right? I was looking for cash flow and also a way to have my loan paid down. Number three was appreciation. I had banked on that this property would appreciate over the long run. I did not go in there thinking that this was going to be a quick flip, a year, flip it, turn it around. I probably could have, but at that time, it wasn't. It took me about 2 years to actually do that. And then the tax benefits, which was one, the depreciation, which allowed us to expense a portion of the physical structure each year, and the 1031 exchange, which allowed us to defer the capital gain taxes, and there was no limit to it. So you can do a 1031 exchange as many times as you want. My property, I purchased a value add multifamily property, and this property was purchased for $850,000. I put $350 down payment, and the seller carried a note for 2 years with a remaining balance of a $500,000 loan. So what did I do during that time? The property needed a lot of work and we needed to increase the rents. So we took those 2 years to remodel and update the units and increase the rents. This allowed us to now bring the value of that property up. We decided on year 2, we had to refinance so that we can pay the owner his balance. And at that time, the property appraised at $1.6 million. We pulled out a loan for $1 million, which was really a loan to value of 65%. And in today's date, we're at 0% invested in this property, and our value today is $2.7 million. So we did pretty well on this property. Here's a picture of what the property looks like. It's in Grand Prairie, Texas. There's a building here with 24 units, 1 bedroom and 1 bath. And then we have a front building, which is 10 units. It's 2 bedrooms and 1.5 bath. So today we're going to discuss a little bit about determining your location. How do we pick the location, and what do we need to ask? What are the questions that we need to ask that agent? So the first thing you want to do is you're going to connect with a commercial agent out in the area that you are considering. You're going to ask them what locations, cities, or specific neighborhoods are they most familiar with. Okay, you're going to ask them if they can provide you with the following research: rent comparables, including any concessions like economic or actual concessions that were probably given to the tenant. Sold comparables, all sold comparables in the area that you're considering purchasing. And you ask them, like, what do you know about each property? Its history, its location, who bought the property, right? That's important. We want to know, is it a big investing firm, or is it a one individual who bought it? Who brokered the deal? Who are the agents involved? The cap rates today and historical cap rates, right? Like, we want to look at what was the cap rate today, what was the cap rate the last few years? And we want to average the property expense ratios. So these are all questions that you want to ask the commercial agent that you start calling to find out about in different areas. You want to ask also if they know what stage is the market in. Usually they have an idea because they're working in it and they know what's going on. Well, we want to know, is it an emerging market or is it a recovering market? Right? This will make a big difference. And what submarkets should I avoid? So if you're talking to the agent, you're looking to buy in one particular area, you ask them, are there any submarkets that I should not even consider? Right? Tell me about the local apartment inventory. Ask them questions. What's going on? Also, tell me about recent local apartment deals that have closed. I mean, and this is important. If this agent is in the multifamily business, they're gonna know what has just sold, what it sold for, what was that price per door, the price per door, and condition, and who bought it. Is it a big big organization of maybe it's a syndication, maybe it's a small, maybe 2-3 investors. All these questions, agents, the commercial agent will know. Who has done really well? Like, you ask them, out of your clients, that you've sold them property or represented them, who has done really well? And ask them questions like, when did they buy? Like, what year? And when did they sell? What are their strategies? And what's the current investor demand for properties? That is huge, because I think, less investor demand equals a lower price, which gives you a higher cap. So we know this market right now is not a less investor demand. We've got a lot of competition right now. Make sense so far?
Yes. Yes, it
Okay.
does.
Fantastic. Now, the other thing you want to do is you want to check online. There's real estate and commercial sites. Some of them you have limited access. Some of them you'll have to either connect with a real estate agent, or you'll have to have a license, and you might be able to connect and get these services. Oh, I forgot to put one very important one on here. So there is LoopNet. That's where I found my property. There's CoStar, there's Crexi, Reonomy, and then there's our traditional Zillow and Realtor.com. So just keep in mind, in order to gain access to, like, I would say LoopNet, CoStar, Crexi, and Reonomy, you have to have an account or be affiliated with a commercial brokerage, because they are very expensive.
With Crexi?
So
Because
there's some of these. Some of them give you limited access.
right, CoStar, I mean, Crexi actually usually sends me property.
Yes.
Through actually an investor referred me. And from there, I would get maybe twice, 3 times a day property from Crexi.
Correct. But if you want to actually search yourself, you have to become a member, or you have to have a license affiliated with a commercial broker.
Interesting. Yeah, they never, I mean, what I bring up is properties, and then they'll say this broker basically handles, contact this broker for the property. But as far as, they will send me properties and I'll go and search, I'll put a search in, and it brings up any properties in areas that I want to search in.
And are they listed already?
Yes.
Yeah. Okay. Okay. Well, I know that many of these, at least the top 3 there, do require some sort of, you get limited access. Like, I can go on LoopNet and I can find some property, but it's got to be limited. I go on CoStar, and now it just opened up a new world for me. I have access to everything.
Okay.
That's kind of what I'm referring to. But these are some of the commercial sites, real estate commercial sites that you can check. So now, when evaluating a market, I mean, you should know things such as, what is the employment growth like, right? We want to know, is there going to be movement in this place that you're going to be investing? Where is the growth concentrated? Okay, what's driving that growth, right? Is it big technology companies? For example, I'm in Texas, big technology companies are moving to Texas. So that's what's driving that growth, these big companies. What are the local market trends doing? And again, we want to look at any interesting interplays with the local government that would pertain to this particular market. So, any questions so far? Because I know that's a lot.
No, I mean, I understand what you're saying. And that's also like going to the not only Chamber of Commerce, but to the city planning unit to find out what's being built in the next 3 to 5 years, or the 1 to 3 years. Because my understanding is that they're supposed to submit a plan.
Right. Right. And sometimes it takes a good 3 to 5 years for that plan to actually get approved. So those are really, these are really important questions that will help you make a solid decision when looking at multifamily in a certain area. That you know what, there is that potential for growth, in appreciation also, right? Where that you're going to be able to do some repairs, some upgrades to the property, increase the rent, and that you're more willing to do these improvements knowing the growth of that market. We don't want to go in and do all this stuff in a market that doesn't have growth, or it's pretty stagnant, because then that means your property's probably, the value's probably not going to appreciate as much. Right?
Yes. Yes.
Okay. So I think the other very important component here is networking. You want to connect with other investment owners and find out where and what they're buying. And I think that this is huge. This really is an opportunity for us. And exactly, I mean, this is one of the reasons why I think that this is such a great platform, is that we're able to connect with other people in all different areas. And we're able to see if they're currently investing, well, what are they investing in? Where are they finding these properties? You know, what are they looking for? How can I use that for my interest? What do I need to do? So, and I know that you do a lot of that. You do a lot of that networking. You're connected with different people, right? And you know, maybe you can ask a few more questions.
Yes.
I hope that these questions help you, because I think that it'll kind of give us a better overall picture of this multifamily world. We want
It
to, right?
does.
We want to look at rent growth. Like, has it been consistently in an upward trend, right? Has it been affordable? Where we know, and I can speak for my property. From day one, it's been upward trend, and then with whatever improvements we've done to the property, and then the market that we're currently in, I mean, it's just taken off. But we bought in an area that we knew there was some definite rent growth. Let's go back for a second. There was employment growth. We knew there were a lot of companies leaving other states and making the move out to Texas, where there was going to be, you know, definite growth, local market trends. We were very close to large manufacturing companies out in Texas. So we looked at, I mean, again, we didn't have a glass ball where we knew we could tell the future, but we made our evaluations based on our study of, okay, the market's definitely hot. People are making the move to Texas. We see the big companies that are moving out to Texas. So that means there's going to be more people wanting to either buy or rent. And we just saw that opportunity. And the property was not in good shape. We knew we had to go in there and fix it up. But again, I had the experience from all the flips and the rehabs and flips that I had done. Well, now this time it was actually easier because now they're all in one area, right? And you can even save a little bit of money because now if somebody comes to work, you're giving them more work in the same area. So it just changes the dynamics. I mean, it's the same thing, but it changes the dynamics when you actually have your own property and it's multiple units there that someone needs to come in and let's say improve for you. You know, the other thing you want to look at is any kind of gentrification going on. And gentrification is really, wealthier people are going into areas that maybe weren't the best, but are being improved and are increasing the rents, and the property values are also increasing. And really, the neighborhood is moving up. Are you familiar with any gentrified areas, William?
Yes, actually, in New York, Harlem it's one area where it's transformed over the years. Washington, D.C., it's another. If you look at what had, property value and seen the gentrification, right now, there's a plan in Philadelphia to do the same thing. They have this 25-year plan. To look, I mean, if you look in Texas and Houston, you see the transformation in many areas. So when I saw it in 2006 to what it is today, when I go back there, you see a transformation in terms of many of the areas. Downtown, you definitely saw a change from 10 years or 15 years, but in terms of the transformation. So yes, I have.
Yeah. Okay. And a lot of investors are looking into purchasing multifamily that are in gentrified areas.
Yeah.
So it's got to make sense, right? It's got to make financial sense.
Because like the brownstones, I'm sorry.
Mm-hmm. No, go ahead.
No, I was just interject, like the brownstones in Harlem. They at one time you can get them for $1, then they went up to 700,000, but now they're 300, 2 million, 3 million, and so investors are still going in and making those brownstones into condos, and so they'll take a building that's 3-4 stories and then make them each a condo, a floor. And so when one investor had asked me to look for a brownstone for him. Bottom line was, years ago, he had $2 million and he couldn't find anything under 2. When we finally got 2 or 3 and went to a building that was being sold, they basically said, we can sell you a floor for 1.5 million.
Oh my gosh.
And that's what's happening. They will take over these brownstones and now transforming the floors and selling the floors for $1 million or $2 million.
Wow. Yeah. And that's why, because they don't have, there's a lack of housing.
Yes.
And they're now converting that. And
yes.
It's incredible that those flats, right? Is it called a flat?
No, well, no, they're considered, brownstones and townhouses.
Okay.
And it's just that they at one time, in a nice area, that they've improved the areas, and they went through and, as I said, they're doing it throughout. Even they're doing it in the South Bronx. Believe it or not.
Wow.
Areas that used to be downtrodden. You can go in there and get something for maybe 50 to 100,000. Now it's $1 million to 2 million.
Oh my gosh. Wow. But wait, so if you're buying it for 50,000 or 100,000, how much are you putting into it?
Depends on the area. And so for
let's
instance,
say one of the areas that you just said right now, like what would you say?
Like in the Bronx, there are a couple of brownstones that are going for 700,000, and they're 3 floors. Some people are converting them to the 3 condos, so they're putting in maybe a couple of 100,000 to convert them,
right,
so that they'll have 3 floors of, so that they can. I had a client who basically was selling each of the floors for $300,000.
Wow. Oh my gosh.
So he, in fact, he bought one of the buildings for 350,000, was raising the capital to put an additional 100 to 200 in, and then sell each floor, which means that 900. So the spread was that he was going to make about, 400,000 or 500,000.
Incredible. And can you still find stuff like that right now?
Oh yes.
Wow.
In fact, there are, in a certain area. I have a church member that lives in that area, and unfortunately, the friend that I was helping, unfortunately, he passed away. He had 3 buildings that he brought me into, trying to help him with 2 that he was trying to convert. But now and then, many of those buildings go up for auction, or they are available and they get snatched up. So, but there are a couple that are available today.
So what happens, for example, okay, so this person had the building, You don't have a real estate license, right?
No.
But but could you not have referred him to a real estate agent to help them sell that property?
Yes.
Okay, and do you do that?
Yes.
Got it. Okay, fantastic. Very good. Well, I mean, you understand where we're going, and you understand how this is all working. I think, oh, let me let someone in here. I think, one of the things that I have realized that if you find that prices are just way too high in your area, that you can always go out of state, or you just go out to an area that's, it's got to make financial sense. I'm in
Yes.
California, and unfortunately, California prices are they're very expensive. And when we do the numbers, those cap rates are just really low. And so you're now investing millions of dollars to get 4 or a 5% cap rate. But that's actually happening in Texas. Prices are going up like crazy.
Yes.
Cap rates in Texas are now a little bit closer to that 4 to 6, sometimes somewhere around there. And so when we purchased, we were like way, way above. And I'd be exaggerating, but I'd say like, not exaggerating. I'm being very conservative, maybe like 12%.
12.
Yeah,
Wow.
12 to 15% cap.
Wow.
Yeah.
Is that throughout Texas, or is that in a certain area?
No, that was my particular property because of the condition, the location, it needed work. We increased, it was underperforming. We really went in and cleaned everything out. I mean, we needed we got rid of tenants, and we did this in groups of maybe 4 or 5. And that way we could go in and work and remodel 4 or 5 units at the same time. And we just weren't afraid. We knew that in order to increase the property's value, we needed to do these repairs. So that's why we had a really high cap, is because the property was in really bad condition. I mean, this was a roach infested property. You'd walk into units and roaches were living in the units, crawling all over the walls, and the people are just sitting there like nothing.
Wow.
Yeah. I mean, I remember walking in, and I mean, first of all, I'm petrified of roaches, and I'd only like take a step in, and the minute I saw all of that, I was just blown away. Like, I couldn't even believe people were living like this. And the owner didn't care. And if you're living in a property under those conditions, do you really think they're going to take care of your property?
No.
I mean, do you really think, can you charge them? I think they were paying like $400 a month. I mean, you can't even charge them anymore because the property is in terrible condition. So we really, I mean, for us, it was a project. We went in with the mindset that we were going to be like our minds. Again, my history is I did a lot of remodels and flips here in California. Same idea. It was, we were going to remodel, but we weren't flipping. We were just getting better quality tenants into the properties, and we increased the rents immediately. So I think we went from $400. People were paying $400 to like $650 immediately.
Wow.
Yeah. And that was just like the 1 bedrooms. And then the 2 bedrooms, 2 bedrooms were probably paying no more than $600. And I think we went to $850. Right now we're like close to $1,000.
Wow.
Yeah.
Yeah. I mean, is there rent stabilization there?
No,
okay.
No, it's definitely a landlord friendly state. That's why I love it out there. California is not. California, it's unfortunate, and I hate to say this, but in California, the tenant has more rights than the owner of the property does.
In New York, that's about New York as well.
There you go. So, I mean, we have tenants. I have clients right now that have tenants that are in the property, not paying. And you know what? They're taking advantage of it. I know that's coming up soon. I want to say like mid-June. They're
Yes.
lifting that.
Yes.
But in the meantime, it's like they literally take advantage and there's nothing you can do. You just have to sit there and take it. And that's one of the reasons why I personally, I don't want to buy multifamily here in California. There are plenty of other states. Yeah, there's plenty of other states that make it much more pleasant to do business.
Yeah, New York has a tendency, it's turning back to landlord, but before, I mean, in past years, it's been more tenants, and it's hard, even before COVID, they remove a tenant. There's something called professional tenants. One of my church members, I helped her for 6-7 months to get a tenant out. I mean, it's things that people are grandfathered in, and then the city will say, well, you have to try to evict them the next month. And they went through the process the next month trying to evict them, but it took 6-7 months to get them out. It's just unbelievable. And then what you're talking about, I think in terms of one of the clients that I was working with, there was a building that we were looking at in 92nd Street, right in Manhattan. Nice area, 19 apartments. But looking at the cap rate, but also looking at the fact that it was stabilized, that you couldn't increase the rates. So my friend says, well, we won't be able to get any good return until 30 years from now. And so we won't be around then. So there's no sense of investing. But it was an ideal place to invest. But because of the stabilization and the programs that they were under, there was no way that you would invest. So what you were saying earlier makes a lot of sense. Where to invest in, looking at cap, looking at area location, the local programs, I mean, makes a lot of sense.
Yes. I mean, I really try to put it very simple, because I think that those are just, I mean, obviously there's more questions and more things that we want to ask, but I think those that I've listed, is just enough for us to have some information, so that we're not going into this blind. Lumel, welcome to the call.
Thank you.
Yes, I'll be sending out the recording. That way you can take a look at it, because I talked today about determining location and questions that you want to ask a commercial agent, and just the things, how you want to prepare yourself when you're determining where to buy. So it was a pretty good topic, and we're coming kind of to the end of the talk. So I just wanted to let you know that I'll send out the video, and feel free to check that out as well, because you probably.
Well, I appreciate that. Yeah, I got tied up, and all of a sudden I said, "Oh, gee whiz, I'm missing the program that you have for today's." But thanks for sending that out. I appreciate it.
Oh no, perfect. Anything? Are you working on any multifamily stuff right now?
And not at the moment, just kind of still doing some background stuff, but nothing.
Perfect.
Yeah.
Okay. No, great. Today was really, let me share a little bit. I have a few minutes here to kind of go through, just kind of go back here. Let me. So I think really, really important was, in determining your location is connecting with a commercial agent and asking them certain questions. And that is, what are they familiar with? Like, what locations and cities and specific neighborhoods do they know of? And then, can they give you information following, like just for your research, rent comparables, sold comps, all comps in the, like just a radius of wherever, whatever area you're looking or considering to buy, and what do they know about each property? Okay, what's the history behind it, the location, who bought the property, you know, who brokered the deal, who buys the property is important, because you want to know, is it a big group of investors or is it a one or two investors? What are the cap rates, right? Average property expense ratios. So these are questions you ask these commercial agents, and you want to be prepared. You don't just call a commercial agent and say, oh, I'm looking for a good deal, you know. No, they want to make sure that you've done your homework, that you are prepared. You ask them just different stuff about like stages, like what did they think? What stage are we in the market right now? Is this an emerging market? Is it a recovering market? What do they say, right? You're asking these questions because this will help you make a very good decision when you decide to buy in whatever area it is that you're looking to buy. Ask them, hey, what market, sub-market should I avoid? Like I shouldn't even touch. Ask about, you know, local apartment inventory, like what's going on out there right now. And then same thing with what apartment deals have actually closed, and they have access to all of this stuff. I mean, if they're working commercial, they have access to all of this. Who has done really well of their clients, you know, can they give you a scenario, like when did they buy, or when did they sell, and what are their strategies? I mean, these are just, again, I'm touching, you know, because again, I only have like 40 minutes, 45 minutes, but I'm touching on what I believe are some important questions, right? To give us a foundation, a little bit clearer foundation of when you go buy something, and you're not buying something in the blind, right? You've done your research. Same thing here, like what's the current investor demand for properties? So the less investor demand equals a lower price, which means higher caps. There's different real estate companies or real estate commercial sites where you can actually look and do your research for properties. I've listed a few here. And also when evaluating, you should know things like, this is critical. What's the employment growth like, right? In the area that you're looking to buy. Where is this growth concentrated? What's driving that growth, and what are the local market trends doing in the area or in that market? And just also any interesting interplays within the local government that would pertain to this market. So this is so important in helping you make a decision of where it is that you're going to buy. And then, you know what, just being able to network and connect with other investors and asking them, like, where are you guys buying? What are you guys buying? Right? Like just connecting. And I think this is a great platform because you can ask, and obviously there's other people on here that are connected in somehow or some way with properties, and, you know, they can share their experience as well. And rent growth, we want to look at stuff that's consistently moving upward in an upward trend. And I was sharing that, you know, I've been in a position where my multi-family property was not like that when I purchased it. After a lot of investing of, you know, improvements and remodels and increasing rents, that's what's allowed the actual rent growth to improve tremendously. Looking into gentrified areas, you know, you can sometimes find some great opportunities in gentrified areas. And if, you know, you find that prices are too high in your area, then you can always invest out of state. So, I mean, just definitely take a look at the video. I kind of gave you a little short overall of what we spoke to today. And I mean, are there any questions, any at all, that I can help you with? You guys are good?
Oh,
Yeah.
I'm good. I was
I'm
waiting
good.
for Mr. Jackson. I didn't want to monopolize time. So I said, Mr. Jackson,
No, I'm
I'm giving you
fine.
the
I don't.
opportunity.
Yeah, no, I'm fine. I don't have any at the moment. The only thing, that concerns me sometime, and I know out of state, you could probably get better deals and stuff, but, with the concern of, having someone, if you're not there, to manage, and that's one of my big concerns, is finding the right person to be able to manage that you can trust,
Right. And you know what? And that's a valid concern. And I think we all go through that. But and I'm speaking only from my personal experience. When we went to Texas, we didn't know anyone out there. We saw the opportunity and we just hustled and we worked and we tried, I formed my own management company, which consists of a property manager and a maintenance man. That's my management company. I only manage my apartments. So I didn't have to hire a third party management company. And, I went through 2 people to find the one that's been there for the last 6 years. And it's just sometimes, it's kind of my philosophy is sink or swim. And I had a lot of money on the table. We had invested a lot of money already on this property. We needed to figure it out. We needed to find someone. And you do just have to go through the process. You can connect. There are small management companies, but I really believe that for 34 units, they were going to take away too much of my profit, that it made sense for me to just form my own little company, offer them each a little salary, plus give them rent concession. That makes more sense for me. And at the end of the day, it allowed us to make more money as well.
Okay.
So I think sometimes you just, I mean, there are concerns. You have to be concerned about that.
Of course, yeah.
But I really didn't let that hold me back. I figured, you know what, I'll cross that bridge when we get to it. We'll get there. And I did. I connected with real estate agents in Texas who had some sort of background with property management. And I had them help me and kind of walk me through of like, how can I put this together? And I realized that it wasn't a job. At least I felt like I could handle it with one good person there. I could handle 34 units.
Yeah.
They're not all giving you problems.
Yeah.
Problems occur every now and then.
Yeah. Now, with regards to managing the financing portion of finance, well, I'm sorry, not the financing, in terms of keeping tabs on your rents and all that kind of stuff, you have software program available where the person that you have, they're overseeing it, that they have access as well as you have access to that program to keep up with what's happening with your rents and stuff.
Correct. So the rents are, due the first of the month. The money goes into, we get a lot of money orders, and that's just the market that we're in. We get a lot of money orders, and she'll deposit those in the bank, and she has to save a copy. She's got to make a copy of that money order, so we know when that money order was issued, and when it was issued, we go by that issue date. Mm-hmm. And it's saved in our software, and we're able to compare. If they were late, then we must, that she's got to add a late fee there to it. I'm sure some stuff are falling through the crack, but you know what? They're minor, right, and it doesn't make sense. And that's just, you kind of have to factor in that percentage, right? For loss. Okay. And that's okay, as long as it's not affecting, but really the overall big picture, is that all the rents are being collected, everything's being deposited, issues are being taken care of, and we try to respond pretty promptly so that the tenants are happy.
Oh, good. Okay. Well,
And we've created a pretty nice and clean community there because these 34 units are all really tight with each other.
well, good, good. Well, that's great. You know, I heard when you said when you walked in the situation when you first walked in with roaches and all that kind of stuff. You know, again, I mean, sometime again, you have to be willing to go in and do those repairs and do that kind of stuff because a lot of people that would turn them off right away.
Oh, I have a lot of friends that are in real estate, and my goal was I wanted to buy more, but I only had enough to buy 34. And I told them, I said, guys, there's opportunities out there right now. If you guys want to, I'll buy more with you guys. Like, you know, in like a partnership.
Right.
My
Yes.
friends got on a plane, flew out there. She walked the property and she was like, nope, this isn't for me. Can't do it.
Oh, wow.
And so
Yeah.
today I talk with those friends and they're like, gosh, we're so proud of you because you really deserve, I mean, like what you did, we were all chickens. We didn't want to do it. And again, it's a combination. I mean, we studied the market. We knew we were looking at cash flow at that time. We weren't really looking at appreciation. We didn't think, because we had heard back in 2015 and prior to that, Dallas or Texas, you know, the property values was not crazy like it is here in California. They don't go up as fast.
Right.
And so our mindset was, hey, we're looking for cash flow. If we're going to be able, if we can improve this property and we can make a really decent cash flow, we're happy. We hit home run. The appreciation and what it's doubled or tripled or quadrupled right now for us, that was just a bonus. And that just happened to be that I was ready for that opportunity. And you know what? I took it.
Oh, good. Well, congratulations to you.
Well, thank you. Thank you. And you know what? I want to do it again. And I want to help other people do it again because it's definitely liberating. It's one wonderful thing to know that you have, you know, money invested in a property that's producing something for you without you having to go out and earn it yourself.
Good.
I mean, it's
Yeah.
not easy. You still have to take care of the property, but you know what? Nothing's easy.
No, no.
So anyway, thank you guys so much for joining my call.
Thank you.
I will be in Puerto Vallarta next week, but I will have my call from Puerto Vallarta.
Oh, wow.
I'm looking forward to putting my call together from Puerto Vallarta. So I'll be in Puerto Vallarta for the next 2 weeks, and I will have my call there. And I'm trying to see if I can get a guest, multifamily agent to come on as a guest, so to, you know, shed some more information and make it interesting for us. So thank you guys so much. This is every Wednesday at 2 p.m. Pacific time. And I will see you guys next week.
Well, thank you. Enjoy your time.
Before you leave, since
Yes.
Mr. Jackson and I were here with you, then we can go to Puerto Vallarta with you. We can carry your bags. And
Come on down. Come on down.
And enjoy.
Come on down. Thank you so much.
Thank you.
Yeah, enjoy yourself. Take care.
All righty. Well, we'll see you guys next week. Don't miss the call. All right.
Bye-bye.